But let's begin with our market panel as we set fresh record closes for both the S&P 500 and the NASDAQ. Joining us now, Barbara Duran of BD8 Capital Partners and Tim Urbanowicz of Innovation ETFs. It's great to have you both here. Barb, I'm going to start with you. I mean, it almost seems like, I realize lower volumes today, holiday shortened session, not necessarily a lot to propel the market in a bigger way, perhaps until Friday when we get jobs report. But nonetheless, it seems like the momentum in general lately has been higher.
Yeah, well, I think that's because you're seeing that investors are even more convinced, and particularly after Powell spoke yesterday, that the economy is strong but weakening. And you saw that in the ADP numbers this morning, and continuing jobless claims up more than expected, probably the fourth time in a row in 4 weeks that it's been above 1.8 million. So we're softening, and we know the Fed is concerned about not going too far because it is a restrictive policy. So, but I think we also think that the Fed is going to cut. And yesterday indicated they're just waiting for a bit more confidence. And before the September meeting, we've got 6 inflation data points to go through in July and August, the PPI 2 times, CPI 2 times, the PCE. So you've got declining inflation, strong growth, and the unemployment number on Friday will be important. So I think the market is just taking a rest. Earnings start in earnest next week, next Friday with the banks, JP Morgan, Bank of America, which are making new highs. So I think we're just taking a little bit of a breather. I think a lot of it is holiday induced, and we're constructive on the market here. I think there's more to come.
Okay. Tim, how do you see this market, especially with the fact that we do have July seasonality factoring in here? First half of the month tends to be very strong in general each year. You have those somewhat dovish comments from Powell on disinflation traction. You have a mixed macro narrative, but certainly no signs that the floor is falling out of this economy, at least not right now. And then, of course, big tech strength continues to power the day.
Well, Morgan, I think this disinflation narrative that we've seen carry in the market really since October 2022 has a little bit of gas left in the tank. And that is what investors are going to be laser focused on for the next couple months. So we expect equities to tick higher. But I think what's more important to be thinking about right now, Morgan, is really what does the future look like beyond that? And when that music stops, when investors start thinking about the election risk that is in play, or when bad news actually becomes bad news. And as you know, we have been adamant, and one of our top strategies has been maintaining market exposure with downside protection in place. We think that is critical right now. And just to highlight how advisors and investors are really thinking about this and how important it is, if you look earlier this week on Monday, we expanded our suite of 100% buffer ETFs, including options like a 6-month JAJL, where you have 100% buffer against losses, 5% upside on U.S. equities. Outside of the Bitcoin ETF launches that we've seen this year, that was the most popular launch that we've seen thus far in 2024 in the ETF market, which I think really highlights how important risk management is to investors right now.